is right. Greed works.
Hello everyone, and welcome to episode 51 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we bought back our put options on the bank and sold the stock index futures that we had bought and ran our net worth all the way up to $660 trillion. The bank made it all the way up to $111 a share. And at that point, we sold the index short. We sold new call options and sold off my CEO earned call options, which generated a $40 trillion expense for STI. We expected that their price would go down as a result once their projection showed or reflected the amount of that expense. As it does right now, the projection is for a negative $5.07. Now, over the last 5 years, he hasn't earned $5.07, so that's a pretty significant expense for him to endure, and naturally his stock price is going down as a result. So we're looking to buy back our call options. We sold them at $82 a piece, and we're looking to buy them back at 70 or below. But the problem is that the interest rate is still going down, our policy is easing, and all of the bank's stocks, all of their earnings are up, and all of their prices are up as well as the bonds. The price of the bonds is up because the interest rate is low and going lower. We have a total of 42 stocks that have reached their target prices. They're all worth 5 times what we've spent on them or more. And yet we're still not able to sell them because the market itself as a whole is still shrinking in terms of the assets that are in the market. So our first priority is to make money on the call options that we have sold on the bank and of course the stock index. But there's a couple of factors that are basically in opposition here. With the interest rate going down and all of his assets increasing in value, the fact that he lost $40 trillion on a one-time expense may or may not be enough to drive him down any further than what he is. So we're going to do a couple of things today that will help increase the effect of that expense by giving him some more expenses. And hopefully all of that will be enough to tip the scales in our favor to where he'll fall below $70 a share. I'll talk more about what those things are here shortly. All right, my spreadsheet is up to date. Market assets are still shrinking. At the beginning of the last episode, which we started at November 5th, 2029, we had $15.2 or $15.3 trillion in assets in the market. That's down to $14.5 trillion, despite the fact that we invested $700 billion in new assets in the last episode. So if we hadn't done that, this would be down to 13.7 or 13.8. So I'm very concerned about the fact that these assets, the asset base continues to shrink, and it's time that we do something about it. So I considered some options between last episode and this one, and I've settled on a couple, it's one, but I'm going to do it multiple times, and hopefully that will have an effect over time. It won't be immediate, and I'll tell you what that is here in a little bit. Basically all of our stocks are looking good. The only problem is that if we sell them off and then continue to do options, which are extremely profitable, so I don't want to stop doing them, they'll all go bankrupt because they'll be chosen as counterparties. But we need somebody with money in the market that can serve as the counterparties for all of our commodities trades as well as our options trades. So we're going to be putting some more money in the market today. All right, briefly before I move on to what else we're going to do, our commodities. We have bought corn and silver, and we have sold short crude and the stock index. But when we sold short the index, we couldn't find a lot of counterparties. So the only company that has index futures is Nico Securities. And he doesn't have that many. All right, so today What we want to do is it's January 1st and his earnings report comes out on the 4th. And with all of this negativity, we want his price to go down, but then we want it to go back up. The more volatility, the better. So if it's going to fall, we want it to fall to where our target is, and then we want it to immediately recover. So one of the things that we can do to help him decline is we can tell the bank to decrease its earnings. Okay, and that'll take another $5.5 trillion, and it'll put it in the bad debt reserve. Okay, but as far as his earnings report goes, it'll be decreased by this much again. All right, so I'm going to tell him to do that. And then furthermore, he's got a ton of non-performing loans. Okay, that he is, we bought all the loans, we were controlling the credit, and that strategy really isn't necessary anymore. We own the largest companies in the game, so the strategy of controlling the credit is when we were small and preventing the big guys from competing with us or from making our lives miserable, basically, by overexpanding. Well, that period of the game is over, so we don't really need all of these loans. So if we sell off or try to sell off the non-performing loans, it's like if I try to sell this one, it won't let me. Oh, wow, it did. Let me try another one here. Okay, well, there's one that it won't. No one will buy this loan due to the poor credit quality of the borrower. All right, so what we're going to do is we're going to buy another bank and have it buy all of these non-performing loans away from STI. All right, so let's find one that's cheap. All right, he's pretty cheap. He's got an AA rating. This one's got better earnings. Let's use him. Actually, he doesn't have better earnings. Who do we want to use? Let's use Societe Generale. He's got a good PE and return on equity. As long as he's 100% public, and he is. Okay, let's buy him. All right, now I'm going to give him $30 trillion. And there he is. And there's a $5 trillion premium on him already. So what I'm going to do now is I'm going to sell 80% of him. And I'll gain a little bit on that transaction. Okay, now what we're going to do is we're going to have Societe Generale buy all the loans on this list that are worth $5 billion or less. Okay, so all the loans for $5 billion or less, we're going to just buy them. Doesn't matter who owns it. We're going to buy them off. And most of the loans that STI has in his possession are B and lower, so they're all selling at a discount. So he'll take losses on every one of these. And down here in the D's, see how big the discount is? It's huge. It's like 80% in some of these. Okay, this one's like 50. This one's 50. That one's 80 or 65 or something. This one's even bigger. So when we sell all of these off, he'll take a loss on the sale of all of them. Okay, now we're going to keep the ones that are over 5 billion because like BP, we want to keep him. He's in an industry that we care about. Okay, this insurance company, we don't really care about, so we could sell that one off, but we're going to do those on a case-by-case basis. But all the ones under 5 billion, we don't care. All right, so I'm going to proceed to have Societe Generale buy all of these. I'll fast forward while I'm doing that, and I'll be right back. Okay, that's all the stocks with a D credit rating. I'm going to have STI sell off the rest so that other banks have the opportunity to buy some of those loans. And I can't believe corn is all the way down to 27 cents. So we are going to go over to Nestle, who I think does not have the full amount, and have him buy some more corn. I don't know what that was. So let's see if he can buy some more corn. And he can, so I'm going to do that, and I'll be right back. Okay, so I did one transaction for 10,000 contracts, and it immediately went up to $2 per, so we're not going to do any more. Okay, so we need to go over to the bank and sell off the rest of those non-performing loans. Okay, so I'm just going to go down the list, sell off the ones with a triple C credit rating or worse, and if it's a B rating and it's selling for less than its face value, like this one's a few $100s less. Of course, that one's a big one. So, but I mean one that's lower, like this one, it's got a $6 million discount. I'll sell those. Okay, and I'll go through all the loans and sell them all off, and I'll be back in a minute. Alright, our new bank has earned a whole bunch of money. So let's see if he has a premium, and he does. So let's sell him off. And hopefully when he receives bankruptcies, he'll use that cash he has to inject more money into the market. Actually, I need to go to me. Here we go. Okay, and I made a little bit of a gain, and we've put more money in the market, which hopefully will help to prevent some of the shrinkage that we've been suffering. So SunTrust has unfortunately gone all the way up to $89 a share. And it won't show us the earnings report, or the projection, I mean. Its value is still $66 a share. Surely everything I just did, selling all those off at a loss, is not going to help him. Whether his price goes up or down, I think I'm going to have to sell this other set of future or call options, because his his financial statement, if you look at it, he made 68 cents, then 65 cents, then 60 cents, then 83. And if he's going to lose money this year, which he should, we want to get all of that out of the way all at once so that next year he can have positive earnings again. And that way we aren't dragging it down year after year. We can just give him a down year and then give him an up year next year. And that'll hopefully make his price go down now and then up later, so we can sell some more options and make some more money on it. Okay. I guess that's it for right now. We just need to work some stocks and get caught up on our list. So let's sort this first of all. Okay, first thing we got to do is go over to Sigma Ulrich and pay off his loan. We had a Standard Environmental. He doesn't use STI as his bank, so we need to have him change banks and pay off his loan. Okay, so we need to give him some cash. All right, let's give him $6 billion. Change banks. All right, and what does CB mean? Oh, change bank. Contribute cash, pay off loan, and change banks. That was it for him. All right, and then we had somebody else with a bank loan, but I don't remember who it was. Let's see if I can find it real quick. Oh, there he is. Archer Daniels. Okay, and Dell had swaps that we need to cancel. So, we're going to just start with Scripps. It's January 4th, so the bank is going to issue its earnings report in just a second. So let's go to Scripps and just take a look, and if we can do something before the bank declares, we'll do it, but otherwise. Okay, here it is, negative 563. 30.96 trillion in losses. Increased its bad debt reserve by that much. Sold off all of these loans at a loss. Of course, that's just a partial list. All right, so hopefully it'll show us the projection now. Negative $1.10, and his price is down to 72. All right, so let's decrease his earnings again. And this time it's only going to do it for 1.2 trillion. But that's fine, any little bit helps. And his price is going up. Of course, the interest rate went up too. Let's check and see if we're neutral or not. Nope, still easing. Okay, it's going back down. All right, so we just got to keep a close eye on it. When it drops below 70, let's cover my call options down here. Currently making 115 trillion on it. So we just need him to go down to 70 bucks a share. Let's see. They're still at 367. His value is down $1, so that's good. Keep going down. All right, let's go back to Scripps. And And in between everything we do, we need to watch that and make sure that we capitalize on it when it falls below 70. Alright, scripts here. My notes say to increase growth and increase the dividend. The industry is growing at 5%. A lot of people going broke. Let's give him another 12 billion and have him buy new assets. That's not what I meant to do, but that was just kind of a brain fart there. Alright, let's buy corporate assets. Let's buy 20, since I now have so much cash, and see what that does. Okay, that's fine. When these guys go broke, that'll go back up. He has 42, so when he goes broke, it's going to go way up. Alright, let's make our growth rate 5%. Set our dividend to 50 cents. Alright, Hartford's earnings are up. Tokyo's earnings are up. Zurich's earnings are down, but not by much. Alright, we're reasonably competent, so let's set our R&D to 8%. Okay, Geico just went broke. And Kathy Life just went broke. Okay, so that's good. 75, he's going back up again. 76, all right. I guess we're going to have to go ahead and cover. Of course, if I sell those futures off, or those options off, I'll get these on like the 15th. If it goes back up, I can give him another. We want to do that anyway to keep all of his losses in the same year. Alright, so I'm going to wait until this becomes vested, sell that off, and then see what happens. Alright, so Scripps is done. Let's go over to Dio. My list on him was to sell corn, which is this. So let's sell that off. And let's see if we need to do anything else for him. He's growing at 2%. He's spending a ton on R&D. Dividend's fine though. Let's see what the R&D is for. He's very capable. Let's drop it. Alright, Swiss's earnings are up. Fortis's earnings are up. And that might be why his stock price is climbing, because their earnings reports are coming out. Berkshire's way up. Okay, Dio's done. Let's go over to Rexall Drug. Irish is way up. Right here, my notes say add assets and change the management settings. Alright, so we want to increase the growth rate to 5%. And we definitely want to buy new assets and reset his dividend. He's currently very capable, but when we buy new assets, that'll go down. So let's buy another 10 billion here. And we'll buy these from Midwest first. Okay, we are reasonably competent, and we're bringing in 42 cents. let's set our dividend or our R&D to 16% and our dividend to 42. Centicore's down. We already took care of Standard Environmental. Let's go over to SoftBank. A note on him is to increase the dividend. And I guess everything else is fine. So let's make it $1.39. Let's have the bank sell off those bankruptcies. Let's get these out of here. They're all too small. We don't intend to keep any of them anyway. These railroads, he's in shipping, textiles. We don't have a stake in any of those. Donna Karen might be the only industry that we have one in. That's retail apparel. So let's send this one over to Ann Taylor and sell off the rest. And no, it hasn't escaped my attention that his price is jumping as we do this. All right, let's take a look at BP. He's become a holding company. He has CITO. CITO has a small stake of Toyota and a small stake in a bank. We don't care about any of that, so let's have SunTrust sell him off. Right, and that just leaves Donna Carroll. Oh, she is in retail apparel, or excuse me, textiles and apparel. Let's just get rid of it. Thought it was in retail. All right, heading back down again. Oh, his projection's been raised. Well, that's going to go away once we sell our call options. Is it the 15th yet? Let's see if my options are vested. Nope, not yet. That's all right. We'll make more money on it. All right, where were we before all that came up? Oh yeah, SoftBank. Did we finish what we were doing there? Okay, so we made the dividend $1.39, and we increased the growth rate. Or nope, we didn't need to do anything else. So that's fine. A bunch of minor ones are going broke. All right, so that's it for him. Okay, Best Buy is next. And before we do him, though, I noticed that corn is up to $4, so let's go over to Nestle and have him sell off his corn. If it'll stay high long enough for us to do that, then we'll go over to Archer Daniels and do the same thing. All right, so I'm going to sell off this corn, and I will be right back. Okay, while I was doing that, we got the notice that I was not granted any stock options due to STI's recent losses. So I think that means this is vested, and it is. So let's sell that off. And whether his price goes down or not, you know, we want it to, but kind of doubting that it will since the interest rate's still falling. You know, I don't know what we need to do to get that to go down. We've done everything we possibly can that I can think of. His projection has not been updated. I mean, it has, it's changed, but it won't get updated for what we just did until the end of the month. So I'm going to hang on until the 1st of February. Let's see what our policy is. It's still easing. So let's do Best Buy, and then I guess we'll see what happens with the interest rate and stuff. So I noticed that crude is edging upward from where it was. Went all the way up to 136 and is now slipping back down. So we got to keep an eye on that. And silver has dropped $2 since we began the episode. We're over halfway into this episode. We've only played 2 weeks, so let's get back to our stock works here. Okay, so Best Buy, we need to add assets and increase the growth rate. He's got some money to work with. Let's see where he stands. Yeah, somebody must have gone broke, and Homebase is going broke too. So I think what we want to do, more or less, is we want to double our size here and increase our growth rate to 6%. We're going to need some more money if we're going to double. New oil crisis erupts as Middle East situation deteriorates. Wire service reports out of Cairo report a major new escalation of the level of conflict in the oil-rich regions of the Middle East. As a result, oil is trading at higher prices on all major commodity exchanges in response to the reported shelling of Abu Dhabi in Iranian gunboats, or by Iranian gunboats. Okay. And we had oil shorted. That's bad news for us. Bad news for Berkshire, bad news for Sigma and me, I think personally. And the Fed will continue to ease interest rates. Wow. Okay. Wow, look at that price. Yeah, Novarco was forced to liquidate his futures. I imagine he would be. Alright, since the Fed's going to continue to ease interest rates, I'm going to need to cover those options right away. So, let me do that and then we'll deal with the oil crisis. We're going to make 75 trillion on the transaction. $72 trillion. And I think what we want to do is we want to sell puts at this point. And we want to do everything we can to increase his earnings and wipe out all the losses that he's had if we can. So, let's see. What we want to do first is sell the put options. So I'm going to fast forward while I sell the put options, and I will be right back. have sold the maximum, and now we need to go take care of all of our short sales of the index and crude. We ought to buy the index as well. Alright, so I'm going to go take care of that, and I will be back in just a minute. Alright, we covered all of our short positions. Now let's see if we can sell short crude now. Okay. Early in this series we had a different scenario come up, the Hubbert's Peak scenario, and it froze all trades of oil during that scenario. I guess this one doesn't do that, so I'm going to sell short the maximum amount of crude that I can. I'm going to have everybody that has cash sell it short. Basically all of the 10 largest companies, or until we run out of counterparties. Alright, so I'm going to do that and I will be right back. Alright, so I did a few, and the number of contracts I was able to get was dismally small. So I did a few, and then I came over to National Oil Well Varco here and had him do some. He lost over 300 billion on the increase in price on the oil, but even he wasn't able to do very many. I mean, you're allowed to do up to 100,000 contracts in a single transaction. And as you can see, the number of contracts he was able to do got pretty small pretty quick. And this is a problem of not having enough money in the market and not being able to find counterparties. So before we try to buy the stock index, we need to basically put more money in the market. So it's time for part 2 of my strategy to do that. So if you add up the top 17 companies here, which I'm going to do. All right, hang on just a second. Okay, there's $953 trillion in the top 17 companies, 18 companies. And I'm going to assume that the rest being that they're all less than a million and a half, make up another $90 trillion. So a total of roughly $1.05 quadrillion are in the market right now. Okay, so what I want to do is basically double the size of the market. Okay, I guess I just realized that this calculator was off the camera. So here it is. So 953, 6, whatever. All right. And let's just multiply this times 1.1. That's what I think is in the market total. Okay, rough guesstimate. So what I want to do is I want to add another quadrillion dollars in cash to the market. And if we do that, we may be able to sell these and replace them with new ones. We may be able to count on the rest of the market to stop shrinking. Okay, and we may be able to find more counterparties, especially for, we should be able to find more counterparties for the stock index right away, but for all the others as time goes on. All right, so what I want to do, or what I'm going to do, is I'm going to buy an insurance company. Last time I did a bank. This time I'm going to do an insurance company. And it doesn't matter which one, but I'm going to do the one that has the largest price to net worth markup. And it doesn't matter on anything else. We're just going to choose the largest markup. All right, and I know he is, got a C credit rating, but that doesn't matter right now. All right, it also doesn't matter the fact that we're way overpaying for him. All right, so I'm going to buy him, assuming he doesn't have stock that prevents us from doing this. Okay. Now I'm going to give him $60 trillion. Actually, before I do that, I need to make sure that he has STI as his bank. All right, let's change his bank. All right, now I'm going to contribute $60 trillion to him. Okay. And the stock index is higher as a result of that. All right, so now we're going to have Mitsui Marine and Fire buy $40 trillion in subprime mortgages. All right, and now I'm going to sell him for a $31 trillion profit. So it came down and I only got 22 trillion, but still. Okay, so I got all my money back and then some. And that insurance company now has money to invest in stock. So if we sell any of these off, he can buy them from us as part of the private sale, or he can go out on his own and buy stuff up. Okay, so we're going to repeat this until we've added another $900 trillion to the market. All right, but first I'm going to have Nico Securities sell or buy, the index, because every time we do this, the index is going to take a jump. And so before it jumps too much more, I want to see if he can buy some index futures, hopefully from Mitsui Marine and Fire. He's going to get some, but not sure how many. Alright, I'm going to fast forward while I have him buy as many as he can. It may not be a lot, so I should be back pretty quick. Okay, as you can see, it's all the way down to only doing 4 futures per contract. So we're going to buy another insurance company, give them 60 trillion, and then we'll try this again. Alright, so actually we got to go to an insurance company. Look at the summary. Alright, let's try Cigna. We'll give him $60 trillion. Oh, first we got to make sure he's using STI as his bank. All right, now let's give him the money. Okay, have him buy subprime mortgages. Now I will sell him off. Another 22 trillion. Okay, and the index is up to 38. Okay, let's have Nico try to do some more futures and see if he can get any takers. Okay, you got a few more, but they're still awful low in terms of the number of contracts. So let's find ourselves another insurance company. Allstate. Okay, let's make sure Allstate uses STI as its bank. Give him $60 trillion. And now we will have him buy subprime mortgages. And now we'll sell them off. 18 trillion on that one. Let's see if Nico can do any trades with them. Started out at 10,000 and it got us all the way down to 20 before it found someone. Okay, time to do some more. So, let's see. Let's try Occidental. $13 trillion on that one. And it may seem like I'm taking advantage of the game by doing this, but the honest truth is, if the market was supporting itself, I wouldn't need to do this. The market needs more money in it. And the only way to accomplish that is by investing. Now, if these didn't show an immediate profit, I would hang on to them until they did. But because they're showing an immediate profit, I'm more than happy to take my dollars out today and let them, run themselves. All right, so let's see. Stock price of the bank is up, so we're losing money on these options now. Just want to check on him real quick. It's February 10th now, showing a negative 11 cents, which is down. We want him to go up. We should probably have the bank do some of these and erase these losses. So if I buy an insurance company and then have the bank merge with it, and then have it sell off the insurance company so it takes a profit, and he can wipe out these losses and maybe end the year in a positive. That would certainly help his stock price to go up. So maybe after I do the first 10 or so, we'll have him do the last 5. See, I sold those options at 105, right? Yeah. So, all right, let me finish here, and then we'll... So how many have I done so far? Let's see, we can go over here and find out real quick. All right, so 1, 2, 3, 4. We've done 4 so far. All right, so 6 more. He's trading nice and high. He's trading nice and high. These two are trading nice and high, but they're NMF. Well, they've got good credit ratings. They must be brand new or something. All right, let's do this one. Lost money on that one, but the market has more money in it. That's the goal. Nestle's way up. Just all that money he made on corn. Gold's getting down to where we're going to want to buy it. All right, who's nice and high? He's nice and high. Taking a loss on them now. Not a very big loss though, so. All right, I took a loss of 5.5% on that one, so we may have to stop before we hit 15 here. All right, so let's do this one and see what happens with him. All right, Williamette is going to file a suit against Vulcan Materials. So we'll have to look at selling Vulcan Materials before that happens. Loss of 5%. So I guess we're done with that. We've got a total of 1, 2, 3, 4, 5, 6, 7, 8 of them, plus the bank. Okay. So hopefully they'll, let's see, what is that, 8 times 60? So $480 trillion we've just injected into the market. Now, like I said, it probably takes some time for it to trickle down to any other companies unless we actually start selling these, in which case those insurance companies should buy these off of us, and you know, they can manage them themselves. Now we'll want to replace these companies with companies of our own, and we'll want to match the amount of assets. It wouldn't be bad to go ahead and do an experiment and see if Priceline here, let's go look at Priceline. This industry average return is in the 40% range, and they're all going broke except for us, so it's going to go even higher, and he's trading at a huge markup. So let's sell him off and have Sigma Ulrich buy either $472 billion in assets, or the maximum if it's not this high, and enter this industry and see. I guess we would have to sell Priceline first, but he's already at his target price. 37.18 and 27.01 was our target. He's owned by Zurich. So let's go over to Zurich and sell him off. Let's sell Priceline and then replace them with a new company and give the new company $466 billion in assets, or whatever the game will allow us to buy. And Zurich owns Sigma, so we'll use Sigma to do it. It'll let us buy $403 billion, so let's do that. To borrow a little money. Okay, so let's give them another $600 billion. Pay off his loan. All right, now the industry's negative, but when all these guys go broke, it'll go up. So let's grow at 5. Well, let's reform our management because we're probably pretty bad. Where is it? Grossly incompetent. So we'll set our R&D, give it into 0. R&D to 21% and growth rate to 1. Okay, so once we get reformed, matter of fact, let's buy this one. Should we do that? Let's see, what's he rated at? He's reasonably competent. He has 96 billion in assets. Oh, we don't want to buy him. He's way negative. Oh no, he's not, because his option is worth more than what he's got negative in cash. That must mean that I'm losing a lot of money. Yeah, the price here went down. I'm now losing $8 trillion. Why is he coming down? Policy changed. It went from easing to neutral and now it's 7%. Alright, before that drops any further, I'm going to buy those back. Oh, was it put options? Yeah, I can't even. Alright, so I'm going to lose money on it. Loss of 16.7 trillion. Alright, so if the interest rate's going up, we want to sell call options on the bank. So if the bank's price is coming down, so will the index. So I guess we need to sell off Nico's stock index futures and then sell it short if he can find any takers. So we're making a lot of money on all these, almost $1 trillion. So let's sell these short and see if we can, or sell these off and then see if we can sell it short. That 1,250 contracts cost us $44 billion. I'm not going to be able to do the maximum with the amount of cash that we have on hand. So I guess I'll just do as many as he can. I'll fast forward while I'm doing that and I'll be right back. Well, it's a lot better. They aren't in the single digits. You know, still not able to do the maximum, the 10,000 per, but much better than it was. All right, so next we need to sell call options on the bank. But before we do that, let's go and check and see who bought Priceline. It's not owned by anybody, which is interesting because I would have expected one of the insurance companies to buy him. It's only $2 trillion and they have plenty to buy that. So I guess he won't be as protected as we had hoped. Priceline did act as the counterparty on at least one of the trades of the stock index. So I guess we're going to go ahead and sell this short, or sell call options. So let's see what his net worth is. His stocks are right now $350 trillion. And if we assume that they're going to lose a third of their value, that would be 230 trillion. Okay, so let me do some math real quick here. His equity right now is 329, and we're going to lose 115. Okay, divided by 5499. Let's get these digits right. He's got 329, so he's going to go down to 215. Divided by 5.4. Alright, so let's multiply that times 100. 38, okay, so times 1,000. 38.9, so $40 a share is what we want to set our call option for. Is that right? No, that's what his net worth will be. Let's see what the limits on this are. Okay, so 65 is the lowest I can make it, or 66. That's well above our $40 net worth value. So let's make this 70 just to be safe. I'm going to sell the maximum and I will be right back. I've sold the maximum of my stock, 96%, which is what I own. Okay, so the next thing I want to check and see is if Priceline was selected as one of the counterparties, and he was. Okay, currently it's not hurting him, but if we make money on it, if the bank stock price goes down, which it is, he's going to lose money, and he'll end up going broke. But that's why we had Sigma buy assets almost equal to what Priceline had, so that if Priceline does go broke, if I can get these pop-ups to stop coming up, you know, his assets will replace what Priceline's what Priceline had. So anyway, we're not going to sell any others until we see what happens with Sigma and Priceline. We're going to give it some time to kind of figure out just what kind of an effect adding that $480 trillion to the market is going to do. Okay, but we've been going for a while now, and I kind of need to regroup and update my spreadsheet and kind of see where we're at and figure out, you know, just what's going to happen. We just had a ton of bankruptcies that we'll probably have to deal with when we come back next time. These two are the only two that SunTrust had, so hopefully we'll have fewer of those as time goes on. But anyway, Thank you for joining me. Hope you enjoyed the episode. If you did, please like and share. And until next time, this is RakeM saying, have a good one.